Oil moving lower as the Arab League weighs a plan to end the fighting in Libya. This after Gaddafi forces struck at a rebel control of oil hubs in the eastern part of Libya. And Reuters is reporting that Libya accepts Hugo Chavez's proposal for international commission to seek negotiated solution to the crisis. Right now, Larry's laughing, oil is trading lower on the day here and in London as well.
Who are they negotiating with?
Let's bring in our all-star panel to discuss how oil prices are impacting markets. Joining us from the NYMEX is Tom Riley, from SES Commodities, and at the CME is Alan Nuckman, Senior Market Strategist at Agora Financial, and our market panelists still with us, Dan Fitzpatrick and Keith Springer. Thank you for joining us. We appreciate it. Tom, let me start with you. Chavez is organizing peace in Africa right now. I guess Gandhi is not available, so they go with Chavez instead. How much faith do you have in this?
Well, I don't think people have much faith in Chavez. I mean, he talks a good game, but what you can really believe is another thing. It's having a negative price effect on oil right now. It's a little bit lower because of this. I'd look for a little bit of a pullback, but we still think oil's going higher.
Alan, let me go to you. I'm going to leave Chavez to negotiate with Gaddafi alone just for the moment. I know it's a breathtaking development. What about Jean-Claude Trichet talking about raising the interest rate, which many people believe is an appropriate response to an inflationary oil shock? But investment-wise, what does this mean? Higher euro, lower dollar, what does it mean?
Well, I think part of the reason that we've seen the crude market move up to these recent highs is because the dollar declined. We've seen the dollar decline almost 5% in the last couple of weeks, so that's pushed crude up. Crude here in America is now chasing Brent. The Brent crude has been leading the way, and it's been about 15% higher. So this latest price shock is reactionary, I think, because Libya is not even in the top 15 oil producers in the world.
Yeah, but who cares?
It's news.
It's trading where it is. You can't fight the
right.
tape.
Traders are reacting to it. But as far as a fundamental undercurrent, we've been in a solid upward trend for 18 months. And, this is just the latest to give the market support.
Well, speaking of that, it perhaps being the latest, one of the big concerns is Saudi Arabia and just exactly what kind of turmoil we might see unfold there. Tom, when you're factoring all of these different worldwide events into where you think oil prices are heading, how much does Saudi Arabia weigh on you?
Well, I mean, if anything ever happened in Saudi Arabia, you would see a shock that would shake America. It would not be good for the American economy at all. I mean, as long as there has been some no turbulence, no violence there, that's a good thing. But if anything ever happens in Saudi Arabia...
Well, if. I mean, do you factor it in right now? Are you thinking that there's a potential that we might see more unrest there?
I'm not factoring it in, but I'm sure some people are. I mean, there is probably a risk premium there of about 5% maybe, or probably right around there. But, on the day-to-day things, and mostly people are looking at the Libyan conflict, and really not, Saudi Arabia hasn't come into conversations yet.
Dan, when you see these blockbuster retail sales, this comes before the tremendous spike that we've seen in gas prices. Gas prices are only going higher. How can it not take a bite out of those consumers?
Well, see, I'm kind of looking at it the other way, Melissa, and that is, if we didn't have all this oil, all this unrest in the Middle East, what would equities be doing? I mean, this is a big part of the wall of worry is this oil issue. And so with respect to consumers, sure, if we get another 10, 15% spike in oil, ultimately that is going to impact the consumer. But you have to differentiate between the consumer and what the equity market is saying with respect to the stocks. And so longer term, that could be a big issue. But short term, we really have to look at the stocks, and stocks are moving higher. Equities are the place to be. But I get what you're saying as far as the concerns.
Right. Keith Springer, let me just come back to you, because you're making some interesting points that rising inflation, at least in the short run, is desirable from the standpoint of stocks. Looking at the data today, the retail sales, chain store sales, the lower unemployment claims, the likelihood that at least the consensus for tomorrow is for a big jobs number, okay? The IFMs, that's probably the best real-time indicators. Those are big numbers. You might even say 4 to 5% blowout GDP numbers. What are the odds that with the whiff of inflation, we have an economic boom? Put oil aside for a minute. Maybe it's going to take 6 months for that to affect. But what are the odds that we're all too negative and there's so many positives going on in the American economy?
I think it's a real possibility, Larry. I'm calling for a 15-20% move in the stock market, the S&P. I think we have tremendous moves. I think the market loves the continued stimulus. I believe it's addicted to it. Inflation's going to help stocks. I think we're seeing tremendous rising corporate earnings. I think the basis for a stock market move in the short term over the next several months is really strong. I think you hit it right on the head, Larry.
Well, you're saying 15% from here, my friend. Is that what you're saying?
I think we can go another 15, 20%, right. 1,500 the S&P, 1550.
Wow, okay. We're going to have to challenge you on that.
I got to leave it there. No, it's very interesting. I want to pursue this line of inquiry. Yes. There is an optimistic case to be made. When we come back, we're going to make this panel even bigger.